Can Bitcoin dump to 74,000 after rallying to resistance levels? And if it does that spell the end of the cycle, or do we have a lot longer to go in the consolidation? Those questions plus a whole lot more are what we'll be answering in today's video. So make sure you hit the like button if you enjoy the content on the channel. If you're new, thanks for stopping by. You know what to do, hit the like button. It's your home of macro cycle analysis. I cover everything from the stock markets to Bitcoin, crypto, and of course, the real estate cycle. We've been doing this for several years now on the channel, and we don't intend on stopping anytime soon. So join us for the ride. Links in the video description for our free crypto and economic report, which you guys would have received yesterday. So go check your inboxes. Let's start off with a broad look at the crypto markets and then dive into the traditional markets, looking at the liquidations over the last 24 hours, because the day before had some very significant liquidations, which are there as a resetting mechanism to the markets, looking for a low here. Now, yesterday was $800 million, not billion, but million. And the last 24 hours saw roughly around $100 to $200 million. So nothing extreme like we've seen in the last 48 hours, but still just sort of average day there. Now, the next thing to look for a reset here is the fear and greed index. For some reason, crypto bros are very thirsty for gains at this point, and we're seeing the market sentiment creep back up into greed. And something that we have identified now is that the sentiment essentially resets every single time we see these pump ups. And by resetting, I mean that we see at least neutral. Most often we see a long time in neutral or into fear. So that's this orange part in the chart down below. Now, the fear and greed index that I'm using is part of the TIA indicator suite, but you can always go through and check this out for yourself. What we're looking for are movements from the dark green down to the yellow. In more closely, we want to see it hit the orange because that is a better reset of the sentiment. Basically, it's going into at least fear. You've swung from extreme greed into fear. And often from these tops, we see it do that. And we see the market, if it doesn't get to that point, we see it happen later. And it's just a matter of time in that case. You can see from May 2024, it swept into fear. It also had a touch in neutral for a couple of days, but it really didn't seem like long enough for the market to reset from that point. But the beauty of it is the price didn't really go that much lower. You can see here it was about 13%. In Bitcoin terms, it's not very much considering Bitcoin's done 500%, over 500% from the 2022 low. So for some, 13% is going to feel like life and death. But when you compare it to where the market has come from, the 500% in the last two and a bit years, then 13% really isn't that much. So it could be a good point to measure from in the future. And what I'm talking about here is that we saw the drop into that neutral period when Bitcoin reached roughly around 92K. We've seen it go slightly lower here at 89K, but there was still greed in the market. So if we are going to drop further, then we might get to that reset point for the market sentiment to form that base. And of course, the questions we're trying to answer in today's video are, for one, can Bitcoin rally and then dump into the resistance? The simple answer is yes, but what would that potentially look like? And is the cycle over for the depth of that move to the downside? So very quickly, my style of analysis looking at trend changes, I'll be looking for anything under $70,000 as a potential of the cycle being over. So if Bitcoin dumps, if you're looking for prices at 60s in, low $60,000, under $60,000, where you would see something like this happen, it's probably very unlikely because that would be breaking key market structure at these strong points. These are the pivot points on the way up to this big, big boom. So if Bitcoin does break down from those levels to try and get you into those prices underneath $65,000, and you get some closes under there on the weekly basis, it's probably unlikely that you're going to see a significant recovery to take out $108,000. Tradable ranges, different story. Maybe you're getting in at 60, rallies to 90, beautiful, 50% trade, get the hell out of the market, right? But if you're looking for this as an entry point to hold over the next 2, 3, 5 years, that would be basically a breakdown of the macro structure. So we can cancel that particular price point. At least I'm doing that for a longer term outlook. Anything under roughly around $65,000 out of this question, and what I've said for a round number there is about 70K, because you're underneath that level of the previous old all-time high and very damn close to these pivot points that happened before the election and would then be breaking key structure in the case of Bitcoin. One thing that has not happened yet in Bitcoin is a backfill of the price ranges that we saw out of the election. And so that takes us to the traditional markets here. So S&P 500, NASDAQ. We've seen a backfill of the price ranges from the election. And you can see the Tuesday the 5th and to Wednesday the 6th. There it is. So far, the S&P 500 has backfilled all of that price data there. So essentially, that excitement from the election, the Trump excitement, all that sort of stuff has been backfilled. And it's not a bad thing. I think people look at this as a bad thing, but at least it's becoming a reset of the market sentiment until we get the next big event. We've obviously got the inauguration coming up next week, and then Trump starts to get into office, and there's all sorts of allegations that he's doing things on his first day of bringing in different sorts of whatever to Bitcoin and crypto. There's always some sort of different news headline to get everyone riled up and their emotions way up here, and yet the price chart is basically looking a little bit flat, and price is what matters at the end of the day. The NASDAQ, same sort of thing. Here is the election. It's just a little way off that at this point. However, it did backfill it just a couple of weeks after the election. You can see that's the low there. Here is the market coming back to it in 18th, 19th of November, and then it took off to that next peak. The Dow Jones, similar sort of thing, filled in that entire excitement from the election, and at the moment is basically attempting a little bit of a short-term base here. And we go across the globe to Australia. Here is the election. Australia was up, back down, and it's refilled in all of that price range as well. Canada, your northern neighbors there, that's the election. It's come back, filled in that whole price range as well. And what the hell, let's go to Europe. Here is the election day here. The Europeans thought that was the worst thing in the world, Trump getting in, and now they're basically way up from that point. So the one thing that Bitcoin hasn't done at this stage is come back and retested that. Does it have to happen? Of course not. Nothing has to happen in the markets. But we've seen that across the stock markets. We've seen it across the US, Canada, Europe, Australia. Maybe we get some sort of area that it at least touches into that price range, into those low $80,000. So the next thing I want to look at is the volume and why that could be a possibility. So we've covered a little bit of the rally up here, the rally to the upside. You've got your targets there of $99,000, which is the 50% level. And basically, provided price remains underneath 100,000, this could all just be call it a dead cat bounce, call it a failed attempt at a rally, and then maybe we see some lower prices. So really easy round numbers, roughly around $100,000. But if there is consolidation above 100K, you get a breakout and then some closes above that level, that is going to be the place of strength for Bitcoin to begin from, to then obviously go and test a new all-time high. But anything up to that roughly 100, as I've had on the chart here for weeks now, that 100 to 102 in terms of a range. And so just before I got distracted, looking at the volume now. So we've got the price pumping up and where the price pumps up in terms of extreme volume. So a lot more market participants coming back into the game at those levels. Often, Bitcoin does a price backfill, if you will. So you can see here on the breakouts of the ETF news, this is where I'm looking at next. I'm looking for these big volume bars. That one in particular, that was in late February into March. Then there was March, and then obviously the March peak. You can see it tried to back test and fill, didn't happen, got a lower top, so a failed attempt at resuming the uptrend, which then resulted in another retest and another retest to that low point there in May. That was the May 1st low. So it could have been over at that point, but it wasn't. But overall, it's not a bad area to begin accumulating from. And at that stage, it's almost like a similar point to where we are now. We've come back and we've started to retest this particular bar here. That range is from 80,000 to a high of 93,000. And the previous bar there, this is the election bar. We're looking at prices of 60, call it 67,000. up to 81,000. So for now, we're just focused on this particular bar here. And at the moment, we've had one failed attempt at a rally into that high and closed back underneath those key levels of $100,000, but we're still seeing this rally into the tops. Now, we're going to look at the scenario of the price failing here and it coming back down to then test some area in that bar. And I'm first going to look at the entire range here. So this is the entire move to the upside, which is exactly, spare me a few bucks, but it's exactly 100% repeat of the total cycle move Bitcoin did from the cycle low to that first March top at around $73,500, projected off the next anchor point, the next key anchor point, which is that August low at 49K. And so that entire range repeated in a fraction of the time that it took the first time around, but you can see it was almost dead on 100%. Look at that top, 108, 300 to 107, 500, literally, a few bucks short of $800, which is not much in terms of percentage move. Did that, and now it's found its first real correction since that August low. So to the downside, which is the 50% area of that current move, of this move off the anchor points, which is why these anchor points are so important, it comes in at $78,000. So literally Bitcoin could retest all of this price range, backfill that price range, go all the way back to the low of that bar, plus a little bit down to 78K, and still be in the strong half of this tool. And that's measured for this important range right now. As a percentage, that would come out at about 27.5% loss from that peak, which would put it well within range of any other average move that it's done to the downsides. Each of these corrections that we've seen along, this bull market, 20 odd percent, 22%, 20 something percent there. I think that one there was only about 17 for the ETF correction. Corrected, I stand corrected, 21%. And the largest one we've seen to date is the March to August low, which was 33%. And so if we want to take a measure of 33% high to low, that comes out at roughly $72,000. So provided we don't get closes underneath those highs, so somewhere around 70 to 75K, closes weekly and the monthly basis, you don't want to see closes under there, then it can still spike to those levels and remain in a macro bull market structure. So what I've covered so far as a recap for you guys is breaks under this mid $60,000 to $70,000 level. You can see the line here and this pivot point, and there are those previous tops there at about 69.9, so call it 70K. So provided we don't see closes under that level, then we're still in a strong position. Ideally not below 78K as a starting point, that it can still do that over this period. If it gets rejected after any sort of rally into the $100,000 or $102,000 level without any closes above, and it would still be in a strong position. It still would be doing average sort of corrections. It's only done 17.6% so far, and down to that low there would be 27%, which would be the second largest correction in this entire bull market, which, if you guys are just starting now, has now been running for 112 weeks, 784 days, a touch over 2 years. The bull market has been going on for that long. So if you need an anchor point to start from, that's it there. That's the low of the cycle, and this is where we've currently run to. The cycle doesn't start from up here. Maybe your altcoin season does, but the Bitcoin cycle has begun from that low, just like we measure each of the other lows from the low to the peak. Bull market starts back there and ends at that peak, but it doesn't feel like it ends until a significant breakdown. So I spent a lot of time covering the price ranges, what's strong, what's weak, where the anchor points are, what I consider a change in trend, basically looking at the macro structure. If you see key breakdown points, that's going to topple over the structure. I think of it like just some easy analogy, say a skyscraper or some sort of building. If you take out the key structural support in that building, the house is going to fall over, the building is going to fall over. But you could knock out internal walls. That's what this sort of thing is here. You can take out these internal walls and you could rebuild them without the house falling over. I should know, I've done this renovation in the last 12 months. We can knock out internal walls. If we're going to take out any of the key structure, we need to backfill. We need to fill up that key support and the foundations there in order for the house to continue to stand. Otherwise, it's not going to be long until that structure falls over. And that's the idea here with these key points. So the recap there You can look towards this zone for BTC, closes under that level, your house is probably going to fall over. House of cards, that is. Anything back to this level, you're probably going to be all right. It's just internal walls. Even if we see a bit of a push to the upside, and then over the coming weeks, we start to retest those levels. And a reason for the market potentially retesting those levels, here's the first one. First one is the S&P 500. Bitcoin is in the white in the background, the white bars, and the colored bars is the S&P 500 in the foreground here. And so we've used this in the past to have a look at when the Bitcoin bull market starts and where the accumulation areas are to a pretty good effect. And this came in at the peak of that March top in 2024. The S&P 500, which is the colored line here, ran up and put in its first correction above the old all-time high, because obviously it's printed a new all-time high. At that time, in this case it was exact, Bitcoin also found a top and then went on its correction, consolidation until it was able to break higher. And Bitcoin started to break higher just after the S&P began to break through that in September. You started to see the trend came back on. Big moves in November, obviously with the election, and now we've started to come back for a correction along with the S&P 500. You might wonder, why is this important? Well, each of the previous cases, you can see how Bitcoin's gone on a very strong run when there was a very clear trend in the S&P 500. That's this colored line right here. So that's the colored bars. When there is more uncertainty in the S&P 500, like here, as I've marked through the bear market, then you've got the accumulation here. You can see that there are sometimes multiple red months in a row for the S&P 500. Even if it shoots a little bit higher, it really wasn't a huge breakout there. And then it's met with bigger corrections. That has been typically the bearish periods for Bitcoin and periods of indecision for the rest of the market, like was the case in 2018. So I can take it back to the previous bull market. You can see this was a nice clear run up. Yes, Bitcoin still had corrections here because it does massive percent returns. It does need to have some sort of pullbacks. And as the cycle went on longer, those pullbacks got shorter and shorter, which is why it pays to measure the corrections in time, as we have been doing when each of these 3-day rule signals have come up. Now, they don't always come up, but for these corrections, it's been really important to measure the time here from the tops to the lows and then the breakout periods, 144 days to that correction. And then the breakout was about 237 days, so nearly 8 months. The reason why that's important is so that you don't lose focus of what's coming next, because wouldn't you rather be here buying up under $60,000 so that you can reduce your risk? It might seem like you're increasing your risk, but you're actually reducing your risk when the market is lower while still in a macro uptrend so that it hasn't broken down, rather than getting in when everyone else is getting in towards these peaks. So that's why I'm looking at timing and watching how these cycles are progressing. So as you can see from the previous cycle as well, or the bear market, it started to roll over to this top that really didn't push that much further. And then you had multiple reds form, another multiple reds, more reds, and then it started to get a little bit more of a clearer trend into that final peak. And that's where we currently sit with this one here. You see the start of the trend, multiple reds in a row. And now that we're in this Bitcoin bull market zone, we are still having this pullback, and there's a couple of red months here for the S&P 500, which is another reason, as I was alluding to, as to why maybe we're still going on this pause here, and it might be a little bit longer to the downside. However, the macro can still remain intact to the upside, major bull market. We've looked at the market sentiment resetting, the possibility of still getting a rally up into resistance, and then a further correction. We've looked at the S&P 500 and how that market also isn't necessarily in the clearest of trends, and then also how the price can backfill and still, provided it remains in a macro structure, backfill that area and still go up in the long term. So 74K, although wouldn't be the greatest sign there, it's still above the previous tops, backfills, and provided you get a bounce out of that level and back above the 50% level, that can still be a strong area for the market to be in. Oh, and the last 50% to show you here is the total range. That's at 78,000. This shorter one is just the weekly swing range here that takes you down to about 87,000. So yes, we've covered those two off now. The USDT dominance has been another key chart that we've been following for a pause in this market and the possibility of corrections for Bitcoin and crypto, and for this market to rise here, so the dominance of USDT, and the similar, well, I was going to say same, but similar sort of patterns have been playing out like they did at the 2021 first peak there, the $65,000 top for BTC. I'll throw on all of the lines and charts. Basically, every time this market has got to the diagonal uptrend, you can see that Bitcoin has put in some sort of top, whether it was the end of cycle, like right here, or midway through the cycle and then corrected from that point. This has been a pretty key diagonal that the USDT dominance has been following. However, now, for the first time in this line, it's remained under this level for a considerable amount of time. So this is going to be pretty important moving forward. Reason being is if it does break back above and remain above that line, that would potentially be the end for the crypto and Bitcoin bull markets, because that's been the level of support. Support above would be bearish. Resistance below that level is bullish for Bitcoin and cryptocurrencies. So at the moment, it's still playing cat and mouse with this line. Each day it tests the line, comes back to sit on the shorter term 50%, just like what we saw in the last 24 hours. So the way that this can remain, I guess, continuing to consolidate at these levels and then eventually break down, is you could see this fall here, which would mean Bitcoin and cryptos would go up in the short term. That would be your rally up to maybe $100,000, $102,000, and then start to bounce away from that level, taking out these lines, coming back to 4.3, 4.4, maybe even 4.6 and 4.8% of USDT dominance, which would then slump the Bitcoin and crypto markets back down to any of these sort of maybe 78K, or as we looked at earlier, that $87,000 or $85,000 level. But going back to the major picture, the macro structure would still be in play because it hasn't broken down from the key support and resistance levels, the key price levels, the swing lows, so on and so forth, right? So this is still all in a relatively healthy position, especially as it continues to fail at that diagonal. And that would bring on a big breakdown, a big failure would bring on a very healthy, you could get very, very excited at that point for a lot of money flying around into Bitcoin and cryptocurrencies should you see a breakdown of roughly 3.7 to 3.8% on the dominance. Now we've got the altcoin market. Quick look at ETH and SUI as SUI continues to drop as well. The total crypto market cap, this one is the true altcoin market cap. So your total crypto market cap, you're turning off all of these market caps. You're turning off Bitcoin, turning off ETH, turning off stablecoin. So it excludes them from this particular reading, which is why you've got the reading at around 800 billion. This one's also in your links down here, 7-day free trial, TIA indicator suite. Still in a healthy position. The breakdowns here remain at $560 billion on the true altcoin market cap, which is your total range for this cycle. Now the short term is 640, which is also those previous tops. So this could still come back down after any sort of retest to the upper side of 840. We've seen it happen many times before. You get these retests to the upside, then some rallies into your final low, higher lows begin to form. It happens so often through the markets, like you can see back here in 2023. That was your banking non-crisis. It did a false break of the lows, started to run higher, false break of the highs, continued back down, but overall the higher lows continued to form. And I think in terms of timing from this point, this particular rally has really gotten out of hand, a little bit too fast, too quick, considering there might be 6 months left, 12 months left of the cycle. If there's 12 months left, definitely too fast. Therefore, a little more consolidation would be required, a little more time to respect the price gains to the upside to see if they actually hold. But if there's only 6 months left, well, you could pretty much see this happen in the next 2 to 3, get another 2 to 3 to the upside, and then the game would be over at that point. But using what we currently have, strength is still there, still above 640 as the first level, and then still above $560 billion. Now, in terms of a measure, 51% correction. Currently, the extreme has been 32%. So down to the 50% line would take it to 42%. Remember, this is everything excluding stables, ETH, and BTC. So it includes basically XRP, Solana, and everything south of that. So it could still get to that point there. Next up is ETH and the strength and weakness here. To remain in that macro move, you're still looking at prices to remain above $2,700. A breakdown of this zone wouldn't be the absolute end, but it would be pretty flippin' weak for Ethereum because it takes you back into the previous consolidation before the bounce out. For now, however, still above 50% and looking to rally up to roughly $3,500. So the strong side to this is, well, you've got this first hold, and what you need to see is at least some close above $3,300, the previous tops, and then above $3,500. Anything up to those levels and a failure basically brings on more downside, more tests of back to 32, more tests of 31, potentially even 29 down to $2,700 over this period. And like we've looked at with time for BTC, it's really only been about 4 weeks. So I've only done 4 weeks into this period. If you look at last period, 4 weeks was only that second test before the next failure. And now, although I don't think it's going to take 21 weeks to reach a low, I'd be looking at somewhere between what it did last time in the first stages to that May low, which was a pretty significant low, to around a 50% level of that 21 weeks. So we've seen a roughly 7 weeks to that first low, and halfway is about 10 and a half weeks. 21 divided by 2, that gives you your answer there. So where does that lead us from here? Well, let's have a look at 7 weeks. That takes you out to February, and 10 takes you out to late February. So early to late February. Should this not be the low, then that still is in a period of a healthy correction, like a balanced correction in terms of time and price. And for time to the upside, it did 19 weeks. So half of 19, 9.5, rounded up, there's your 10 weeks. So you're still looking at a balanced correction here, basically half the time, potentially half the price. That exact point would be down to your 50% level at $78,000 in 9 to 10 weeks. So say in around mid-February, if it did that, it's still an absolutely healthy market moving forward from this point. So we've covered the USDT, what could happen there. We've covered total 3, the true altcoin market cap. We've looked at ETH, and the last one here is to look at SUI. So if we are seeing any sort of correction, SUI hasn't been as strong over the last just couple of days, actually, while you've seen Bitcoin and cryptos rise. It's because you're starting to see SUI BTC break down. The first 50% level is at 440, a couple of lows here at 420, and it seems like, as I've talked about on the channel now for a couple of weeks, it might be putting in a similar pattern to what happened to SUI back at February and March of 2024, where you had this all-time high pullback and then another attempt into another new all-time high, failure underneath the old all-time high, and then it went on a pretty significant drop, 70-80%. Can it happen again? Sure it can. It seems like things are working out towards that timing. However, it hasn't broken down from some key levels just yet. What you would see first is an overbalance in time and price. There's an overbalance in price, a big one there. So you're just looking at any of these corrections, measure the largest one and project that from the top. And that's going to be one of your first signs that it's probable you're going to see a longer correction in SUI. Now, I'm not making this market. I'm just telling you what the rules are when it comes to the analysis. Doesn't necessarily mean it's a bad thing, because if the cycle has further to go, well, that gives you another entry opportunity, maybe below 350 or 290, to then pick it up and then watch it run over the coming 3, 6, 12 months. So while Bitcoin's on its rally up to $98,000, $99,000, there's still a lot of work to be done. So although I'm long-term bullish, the short-term, call it days to weeks, it hasn't given us any signs yet that it is the final low. There are some chances that it is the final low based on what we've talked about in today's video and yesterday's video. I'll leave a link to that at the end of this video. So make sure you stay tuned, hit the like button, subscribe to the channel. We don't need to be too worried, I think, at this stage. I've given you those points within this video where we should be worried that the game is over. But for now, just continue to ride it out. And in case things do pick up, you start to see a little bit more greed come in, maybe even extreme greed at this point. I'm not going to be too over the top unless we see consolidation above $100,000. That's as clear as it can be. So if you take anything from this 30-odd minute video, take that. See you guys at the next video. Till then, take care and peace out.